As the AI industry continues to grow and expand to almost all the major sectors of the world, top stock investors have positioned themselves on the buy side of the AI stock industry. With this in mind, here are the top 4 AI stocks to buy before the 2025 boom. Number 1 on the list is C3.ai, NYSE AI. C3.ai operates as a software as a service SaaS company specializing in artificial intelligence for enterprise applications. Despite earlier volatility, it recently posted an 18% revenue increase in its quarterly report, hitting $78.4 million. The company's gross margins remain strong at around 73%, reflecting efficient operations. Trading at a significant discount to its IPO valuation, the stock appeals to investors looking for affordable exposure to AI. C3.ai continues to expand partnerships, including collaborations with Google Cloud and Microsoft, enabling deeper integration of its AI solutions. Its chart shows a steady recovery from earlier declines, with support levels forming around $25. Breakouts above $30 could signal renewed investor confidence, particularly as adoption of AI across industries grows. It closed the most recent trading day at $36.39. moving plus 0.08% from the previous trading session. This change outpaced the S&P 500's 0.38% loss on the day. On the other hand, the Dow registered a loss of 0.31%, and the technology-centric Nasdaq decreased by 0.59%. The company's shares have seen an increase of 37.99% over the last month, surpassing the computer and technology sector's gain of 1.48%. and the S&P 500's gain of 3.76%. Investors will be eagerly watching for the performance of C3.ai Inc. in its upcoming earnings disclosure. The company's earnings report is set to be unveiled on December 9, 2024. The company's upcoming EPS is projected at $0.16 per share, which would represent a year-over-year decline of 23.08%. Number 2. UiPath, NYSE Path. UiPath specializes in robotic process automation, RPA, using AI to streamline repetitive business tasks. The company introduced innovative tools like AI computer vision, enhancing automation capabilities for non-structured data, a major step in enterprise AI. UiPath is trading at a 58% discount to its IPO valuation, making it an appealing investment for long-term growth. Revenue growth in the 20% range annually demonstrates the effectiveness of its RPA and AI integrations in driving enterprise efficiency. UiPath stock is consolidating, with resistance levels near $19. A breakout above $20 combined with strong earnings results could indicate an upward trend. Analysts highlight its potential to capitalize on the increasing demand for enterprise automation. In the latest market close, UiPath reached 1450, with a +0.83% movement compared to the previous day. The stock outperformed the S&P 500, which registered a daily gain of 0.3%. Elsewhere, the Dow saw an upswing of 0.99%. while the tech-heavy Nasdaq appreciated by 0.27%. Shares of the enterprise automation software developer have appreciated by 15.3% over the course of the past month, outperforming the business services sector's gain of 5.95% and the S&P 500's gain of 2.1%. The investment community will be closely monitoring the performance of UiPath in its forthcoming earnings report. The company is scheduled to release its earnings on December 5th, 2024. The company's upcoming EPS is projected at 0.07, signifying a 41.67% drop compared to the same quarter of the previous year. In the meantime, our current consensus estimate forecasts the revenue to be $347.65 million, indicating a 6.67% growth compared to the corresponding quarter of the prior year. Number 3, Microsoft, Nasdaq, MSFT. Microsoft has positioned itself as a leader in generative AI, leveraging its partnership with OpenAI through a $13 billion investment. This collaboration powers its AI-enhanced offerings such as Azure OpenAI services, delivering AI models like GPT and Codex to businesses, enabling advanced language processing and development capabilities. Copilot integration is deployed across Office 365 and Dynamics 365, using generative AI to automate tasks like drafting emails, summarizing documents, and forecasting trends. This creates substantial productivity gains for enterprise customers. Industry-specific solutions. Microsoft offers tailored AI services for healthcare, retail, and manufacturing, helping businesses optimize processes and improve decision-making with predictive analytics. The company's AI-first strategy extends beyond software into hardware innovations, such as AI-enhanced Surface devices and its focus on integrating AI into gaming experiences. Microsoft's financial resilience makes it an attractive investment. Cloud revenue growth. Azure, Microsoft's cloud platform, posted $24 billion in revenue in the last quarter, driven largely by demand for AI workloads. Azure's AI services account for a significant portion of this growth. Profitability and margins. Microsoft's operating margins remain strong at over 40%, reflecting its ability to scale while maintaining profitability. Diversified revenue streams. AI is not the sole driver. Microsoft benefits from its dominance in enterprise software, gaming, Xbox, and LinkedIn, creating a balanced growth portfolio. Outlook for AI investments. AI is expected to account for an increasing share of its revenue mix, particularly as its AI tools gain traction in enterprise and consumer markets. Technical analysis. Microsoft's stock performance reflects strong bullish momentum. Trend strength. The stock has consistently made higher highs and higher lows, a sign of sustained demand. Relative Strength Index, RSI. RSI readings indicate that while the stock may enter overbought territory at times, pullbacks have been shallow, reflecting investor confidence. Price levels. Resistance around $400 could act as a psychological barrier, but breaking this level may trigger further institutional buying. Key support levels around $350 provide a safety net for long-term investors. Moving averages. Microsoft trades well above its 200-day moving average, reinforcing the long-term uptrend.